Here are the 3 fastest ways to reduce your taxes legally. My name's Steve, a millionaire former public school teacher now teaching about finances. 1. Open an HSA. You can now contribute up to $4,300 in 2025. What you put in is tax deductible, the money grows tax-free, and your withdrawals are also tax-free for qualified medical expenses. 2. Tax loss harvest. If you lost money in crypto or stocks, you can sell them and reduce your taxes up to $3,000 this year. And if you lost more money, I'll make another video on what you can do. 3. Max out your tax advantage retirement accounts. You can contribute up to $23,500 into a 401k and up to $7,000 into an IRA. The more you contribute, the more it reduces your taxable income, meaning that you'll be at a lower tax bracket.
Recently, I was invited into an online community filled with business owners and high-earning W-2s, and we were talking about specifically tax reduction strategies. And we talked about these and so many more strategies. When it comes down to it, I tend to steer away from tax deferral strategy. Ultimately, when you're trying to reduce your tax burden, it's always going to be a combination of one or more of the following: deductions, credits, and the most beautiful word in the tax code, exclusions, which is sort of like a cloak of invisibility around your money. And I steer away from deferral strategies because I just have negative opinions with regard to where tax rates may be in the future. And I say that with confidence because if you look at the history of the tax code, the vast majority of the time tax rates have been higher than where they are today. And if you look at how the government operates, I just have no faith that they're going to need less money in the future to continue operating the way they have been. Likely, they're going to need much more. And that's going to come in the form of taxation in one form or another. When it comes to figuring out how to reduce your tax burden, though, one of the key strategies that we talked about that night is the concept of a depreciation deduction, specifically with regard to investment real estate, which is likely possible for both business owners and high-earning W-2s. You see, when it comes down to this particular strategy, in order to really enjoy it, you need to qualify for something called an exception to a passive activity loss rules. And there's a variety of different ways to get there. If you're interested in figuring out, though, which strategies apply best with your situation, you want to sit down with a knowledgeable advisor, someone who's well-versed in the tax code and how it actually applies to your circumstances. Now, I have no idea whether or not that's me, but I do know we can find out by you simply dropping the word apply to fill out a quick questionnaire.